Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. All right, in yesterday's episode, I talked about a warning when it comes to TSLA, Tesla stock. Now, today was day one of a 2-day potential crazy day. So, in today's episode, we're going to talk about what happened today, what we uncovered, what the results were with everything, and then we'll prime everybody for tomorrow. All right, before we get into it, do me a favor, hit the like button, hit the subscribe button, ring that bell. You can always support the channel by signing up to our Patreon, the link down below. All right, with that said, let's jump into it. So let's kick it off with the delivery numbers, the production numbers for Tesla at a Giga Shanghai. So here we can see from Troy TSLA, Giga Shanghai production in May was 33,544 vehicles. That's pretty much in line with what I expected. I don't expect any surprise in June. So this was actually somewhat of a beat compared to what a lot of analysts expected. So it was a little bit higher. It's nothing crazy, but this is essentially in line with what we expected. And so as a result of that, plus what we're about to see now, take a look at this. UBS upgrades Tesla to a buy. Tesla future is brighter than ever. With both of these things coming out, Tesla had a very nice rally for the majority of the day. Let's read this article and then we'll talk about the stock. So the article says, UBS analyst Patrick Hummel upgraded Tesla from neutral to buy with a price target of $1,100. The analyst comments, we upgraded Tesla to a buy with an unchanged $1,100 price target. TSLA is down 35% year to date in line with other tech stocks, but we believe the operational outlook is stronger than ever before thanks to 1, record high order backlog, and 2, new gigafactories ramping up, 2, margin momentum. After the Q2 dip, auto gross margin should structurally exceed 30%, driven by pricing and product and process innovation. 3, a structural competitive edge in key supply chains resulting in superior growth and profitability. While we cut 2022 earnings per share by 12% to account for the Shanghai lockdown, we raise earnings per share for the next 3 years by up to 40%. Resulting in a $28 EPS 2025 to be achieved, mostly yada, yada, yada. So this was a big deal. So this combined with the beat or the better than, I guess, expected, even though slightly, production numbers out of Giga Shanghai sent Tesla stock roaring this morning. We went from essentially $720 all the way up to $766, right? This was a very, very nice, healthy move for Tesla stock. Now, as you all probably aware by now, Tesla stock deteriorated as the day went on. All right, so we hit 766, and then from there, it was just a march all the way down till we got into the red, and we closed about $5 or $6 down. Now, although that's somewhat upsetting, when you see what happened with the broader market, it actually wasn't that bad. All right, really, we should have been down about 5% when you look at it as holistically, since the NASDAQ was down about 2.5%. Tesla is a beta 2 stock. In other words, whatever the NASDAQ does, times it by 2, that's how much Tesla should have been down, but it wasn't. So that was very, very promising. So while we can't do much about the stock price, we can focus on the good news. Take a look at this. Sawyer Merritt reported, Tesla was proceeding with an online hiring event in China on Thursday and added 24 new job postings. Tesla plans to hold an event online starting from 7 p.m. Shanghai time and will recruit staff for smart manufacturing roles according to online posts. So this kind of laughs in the face of the whole, Elon said he's not hiring anymore, there's a hiring freeze and all that. So this is very bullish, and this goes along with the email we did see that Elon released, or Elon didn't release, but he sent to all internal employees saying that hourly positions will increase. So I thought this was very bullish. There was also this article that has Reuters as a source. Believe it or not, Reuters, who in my mind right now, they are the FUD media, especially after everything we saw with the Elon emails. But they say that Tesla aims to make more than 71,000 units in June and aims to produce more than 17,000 cars per week from June. So although that sounds kind of benevolent and just kind of factual and that's it, take a look at this. This is from the article itself. If we look up top, we can see it says production at Tesla Inc. Shanghai factory is on track to fall by over a third this quarter from the first 3 months of the year, as China's zero COVID lockdown caused deeper disruptions to output than Musk had predicted. Now, the reason this kind of bothers me is just the way they start off the narrative, right? There's two different ways. You can start it off like this, saying Tesla or Giga Shanghai is on track to have a third less vehicles, or you could say that Tesla, despite the lockdowns, are on pace to ramp up in June to 71,000 vehicles. It's all about like how you frame things, and you can frame things to be in a negative light and a half empty cup or in a half full cup, or you can just give the facts. And the facts are Tesla China was shut down due to COVID lockdowns. Because of that, April was essentially no production. May was very slow production. The numbers were 33,000. And then in June, we anticipate to be back to full ramp at 71,000 vehicles for the month. You see how there was no inflection on that? There's no bias. There's no cup half full, cup half empty. It's just the facts. That's what media needs to do. Just give the facts. Let me make up my own opinion. Don't try to spin this or have any kind of negative or positive tone in this, right? This is nothing more than deceitful, in my opinion. Now, with that said, apparently Elon Musk did have a message to all employees during an all hands. Let's read this article from Electric. Elon Musk told Tesla employees to expect a nutty end of quarter delivery wave this quarter at a new company-wide meeting. The automaker has been trying to move away from quarterly delivery waves, but special circumstances made one inevitable at the end of this quarter. Tesla has been known to have intense end-of-quarter delivery pushes due to the distribution system, which is very different from other automakers that use third-party dealerships. Since Tesla sells directly to customers, the automaker owns the vehicle until it is fully delivered to the buyer and paid for. It results in transit times being extremely important for Tesla financially, since the automaker takes on the cost of building those cars and doesn't get any money until the customer can actually pick them up. Therefore, when Tesla has a lot of vehicles in transit at the end of a quarter, the quarter looks bad for them financially. It's why Tesla tries to build a vehicle for exportations at its Fremont factory and Gigafactory Shanghai early in the quarter, and vehicles for local deliveries later in order to allow for transit time by the end of the quarter. All right, so we all knew all that already, but it's good context. However, this strategy results in Tesla's sales and delivery team having to handle significant volumes of vehicle to deliver towards the end of each quarter, which are called delivery waves or delivery pushes. This both increases costs at Tesla, as Tesla does everything logically to get the cars to customers, and negatively affects the delivery experience for the customers, who are often rushed to take delivery. This, again, you can see, like, that doesn't mean that it negatively affects customers taking delivery. Can it? Sure. But so can any delivery experience. In fact, I don't know anybody who's ever gone to a dealership with a positive experience. All right. So I don't know. Again, this is the kind of little things that people put in there that I don't think they should. Anyways, at the end of last year, CEO Elon Musk told employees to worry more about the costs than delivery waves. However, he told Tesla workers to expect a significant delivery wave this quarter during tonight's company-wide meeting. All right, so what did Elon actually say? So, CEO responded. There's a question first. During the meeting, Musk was asked by an employee when delivery cycles will level off to avoid the insane end-of-quarter delivery push. And the CEO responded, "This has been a challenge since late 2008. There always seems to be something that happens and causes end of quarter to be nutty, and this quarter will not be any exception, mostly because we had this huge challenge with the COVID restrictions in Shanghai. It basically shut down Shanghai factory for much of the early part of the quarter. It is only now getting back to full production. It will be pretty intense this quarter." So this goes on to say some other stuff. I just want to highlight something else that seemed like it was a little controversial this morning on Twitter. Down here, the article finished off saying this: the CEO previously said that that they will probably not break another delivery record because of the production shutdown, but he hinted that Tesla could possibly still deliver close to 300,000 vehicles. Now, while it's true that Elon Musk did say that, he said it during the Q1 earnings call when we didn't really know how long Shanghai would be shut down for. So I don't think we'll hit those numbers. Again, you guys have seen my numbers. I went through it with my 2022 price target, my base case. I shared that with you guys, and I showed you how I did the breakdown for this quarter for Shanghai. And essentially, I'm anticipating about 250,000 vehicles, all right? 250,000 or above, and I think that was an excellent quarter for Tesla. Anything else, and that's just cherry on top. So a lot of stuff to really digest here overall, okay? So we did get production numbers from Giga Shanghai. The nice thing is that we also got that upgrade for Tesla stock to a buy rating, $1,100 price target. And the even better part is that we saw Tesla rally because of all this good news. Now, what I was a little worried about was that a lot of analysts haven't brought down their estimates yet for deliveries when it comes to Q2. Right, a lot of them are still sitting at around 275,000 vehicles, and I just don't think that's happening. It's going to be around 250 by my estimation, and so we need analysts to bring their numbers down. However, I was pleased to see that the stock didn't take a hit because it wasn't a bigger number. All right, the fact that analysts haven't brought their numbers down yet made me worry that this 33,000 vehicle number, that they would be disappointed by that and just lash out because of that. So that's all good. And so today was day one of this scary, calm before the storm. And we actually had a storm today. All right. If you, again, go look at the indices, go look at NASDAQ, Dow, and S&P 500. They all took a beating today, down several percentage points. However, Tesla held up very, very well. So why did we sell off towards the end of the day? Well, because tomorrow at 8:30 a.m., we get CPI reading numbers. And while we can see, potential bright sides here and there when it comes to inflation in the market, this CPI number is arguably the most important data point we've gotten in a very long time. And I think what happened today was a lot of people were de-risking, they're selling off, they were buying puts just to hedge against what might be a hot reading, which isn't good, tomorrow at 8:30 a.m. So what are we looking for? Look, anything I would say 8.2% or lower, we're good. Anything 8.2% or higher, we're not good. Anything, say, 8.2 to 8.3, it could be benign, or that's one of those situations where it's just flip a coin. We really need to start seeing inflation come down. If inflation come down, then that means that what the Fed's doing is working, which means maybe, just maybe, they will ease up after the 50 basis point hike in July and in June. All right, this is what we want. We want to see meaningful inflation coming down, and we want to make sure that we're going to the right direction. That would also mean that we potentially hit peak inflation. So that's what tomorrow is going to be about. Tomorrow is D-Day, right? This is going to essentially determine what the market's going to look like for the next 6 months. All right, tomorrow is everything when it comes to the stock market, when it comes to inflation. Now, there's a lot of data coming out too, and I think the economy and the entire country is starting to come to grips with the fact that we are in a recession. It's almost a certainty now that we are in a recession. Now, this isn't all as bad as it might seem, because a lot of people are anticipating a recession happening next year or in the back half of 2023. Why could this potentially be good? Well, if we are in a recession, if we get that confirmation, well then hopefully and normally that means that we've already gone through the majority of the recession. We just didn't know it. And we would have confirmation that we're in a recession. So really, from here, it should only get better, right? Maybe we can keep going down a little bit, but we know what the worst is. We are in it. And so this gives confirmation the market will know, and the market loves knowing, right? The market does not like uncertainty. So a lot's going to happen tomorrow, 8:30 a.m. We get this inflation number. I'm hoping that we are at 8.2, 8.1 would be amazing. Sub 8 would be incredible, but I don't see that happening with energy. All right, so keep an eye out for that. I will talk about it tomorrow, of course. So I'll leave you with one last thing, and this is maybe a sign for hopium, if you will, optimism for tomorrow. And it's this tweet from Gary Black, where he's essentially referencing a article from Bloomberg with Kathy Woods. And so Kathy Woods, the article says, Kathy Woods sees huge inventories as evidence of inflation will ebb. And Gary Black says, agree with Kathy Woods. Huge excess inventory are deflationary. And so we've seen what happened with Target, right? We're starting to see what's happening with used car prices. Lumber prices are just cratering. Housing is slowing down, right? That we had the least amount of mortgages in 22 years. So we see the economy slowing down. We see inventories building up. We see cost of goods starting to come down, right? Target had 30% sell on everything. They have too much inventory. They have the wrong inventory, right? So we are starting to see signs of this. And so again, just as a sign of hopium, maybe, just maybe, tomorrow will be a cooler read on inflation with CPI than what we expect. We're going to leave it there for today. Do me a favor, hit the like button, hit the subscribe button, or ring that bell. I love you all. Good luck tomorrow. Peace.